Hello everyone, my name is Oliver from Lux Trading, and in this video we will compare the maximum daily loss that a lot of challenges and other prop firms use with our own relative/hybrid maximum drawdown. Most challenges prop firms use a daily drawdown, which is just a different word for a relative drawdown based on equity, which is far more complicated than our drawdown based on balance. Their matrix in the trader dashboard does not show relative maximum drawdown level based on equity. Our relative drawdown based on balance, though, is much easier to work with. You always know how much your risk capital is, where your drawdown limit is, and how much you can still lose. If you do not remember that, metrics in our dashboard is a great tool for you to just look at it and know exactly how much you can still risk. As you can see here, this is a screenshot of our trader dashboard, which clearly shows the balance, the equity, the maximum drawdown level in numbers and in the chart, and that is updated every 10 seconds. You can see all the metrics as well as what your maximum drawdown level is. This way, you know every 10 seconds how much capital you have left, and you can adjust your stop sizes and lot sizes based on it. If we compare this with prop challenges models who use a relative drawdown level based on equity, let's take a look at how it works. As you can see, on 18th of October, I had two trades. I had a loss of $72 and a win of 170. So I made $100 profit. But when we look into the trader dashboard, what we can see is that my max daily loss is at minus $231. So even though I was profitable that day, it is still possible for me to be kicked out and lose those 5% or the 500 just because it's based on equity. That means that with this kind of relative drawdown, it's almost impossible to keep good risk management and to decide where to place your stop loss and what kind of lot sizes to take. If my trade goes 40 pips up and 40 pips down, and up again, those 40 pips are counted as a loss. That's why drawdown based on equity is much harder to work with, as you never know exactly how much you can still risk. If that was by us, that could not happen, as I would be in $100 profit and that's it. The difference between drawdown based on equity and our relative drawdown based on balance is that with us, you always know how much you can risk. Our dashboard shows it to you every 10 seconds. You know what your risk capital is, and you know where to place your stops. More traders fail on relative drawdown based on equity than they would at one based on balance. The time pressure will push you into taking more and more risk, which, as you know, the more fluctuations, the bigger your daily loss, and the easier it is for you to get kicked out, which we don't want. But with relative drawdown based on balance, you have no time pressure, you know where your stops can be, you know how much risk capital you have, so you have no stress. And the fluctuations between your entry and your take profit doesn't matter. So you can trade with much less risk, and you can set your profit targets, stop losses, and expectation based on real numbers. From stage 3 and later, we use a hybrid model. Our 4% hybrid drawdown works as a combination of a fixed and relative drawdown. Let me explain to you what that means. As you're trading throughout the month, you accumulate some profit. But once a month, we pay out all the profit to you. And after you as a trader withdraw your profit, the account balance and the drawdown level are reset to the initial balance. So every month you make a profit, you withdraw, and you start from a fixed drawdown again. We've implemented these drawdown to create consistency in the traders and to teach them proper risk management as well as safe keep their and our profits. What we don't want happening is traders using their profits to take more risk. It doesn't really make sense on our account, as once you accumulate 10% of profit, your account doubles anyways. If you have any more questions about risk management, we have our Chelton Wealth Asset Management Risk Desk here for you. Feel free to reach out to them and ask for advice, ask them to go over your trading style and to help you with risk management. They will advise you on how to trade with our 4% drawdown, use of stop loss, use of leverage, use of lot size, and most importantly, setting realistic expectations. And if you have any other questions, feel free to reach out to us on our 24/7 live chat or write us an email at info@luxtradingfirm.com. And for now, everybody have a great day.